Howdy. Welcome back to Dion Talk. This is probably just going to be a nice, super short live stream. I kind of wanted to take a few minutes and cover everybody freaking out about Zillow selling off 7,000 units. And in a lot of the Facebook groups that I'm in, people are saying, is the Zillow sell-off going to create another housing market crash? Is this an indicator of another housing market crash? To have a balanced market, to where it's not a buyer's market or a seller's market, we need about 3 million homes on the market. Right now, it's hovering between 1.1 to 1.3. It keeps going up and down. We're nowhere near a balanced market. So right now, it is strong to the seller's side. 7,000 properties added to 1.2 or 1.3 million is not going to make a big impact. Locally, like in Phoenix, where they're trying to sell 250 houses, you might see a bit of a surge in inventory, but that's not going to cause a massive crash across the board. It's not even really going to cause a big problem for Zillow itself, because everybody says, well, with this news of Zillow getting out of the flipping business and selling off these properties, the Zillow stock dropped, was it like 9%, which is still 13% above where it was last month when it was at its all-time low. So the business is making some changes, and they picked a strategy that didn't work for them. This is not in any way going to cause a crash. This is not in any way probably even going to cause any kind of a correction, except for in some, they're really selling these in 3 different locations. So in those locations, you might see some buying opportunities. But 7,000 houses are going to go pretty quick. Got my short Zillow rant out of the way. I'm going to try to do these live streams every Tuesday evening for now. I might move it to Saturday afternoons, depending on when people have the availability to watch. So if you're more interested in Tuesday evenings or Saturday afternoons, let me know in the comments below. I'd appreciate it. I wanted to do the live streams because, to me, it seems like we learn the most when a question is asked and a conversation happens when the answer happens. It's easier than making content where I make a video and I put out something I think people want to see. I'm very open-minded. If you have an idea of a topic you would like covered or something you would like to go a little bit more deep into, let me know. I can do the research and put something together. I see it. It's like I said, it could be possibly a Tuesday thing, or it could be a Tuesday or a Saturday thing. I should do both. I wish I had the time to do both, but life keeps happening, and I'm back in buyer mode right now. So I'm looking for the next property. And my process is probably the same as most other people's processes when it comes to buying property. So I'm going to break that down really quick from start to finish. I have 3 agents with auto searches set up. So I can give basically the same cookie cutter criteria to each agent and let them set up their searches. And it's really weird. I've been doing this for over 10 years. And even though the agents have the exact same search criteria, I've only one time in 10 years have those agents sent me the same properties. So somehow when people search on the MLS, it's nuanced and they do it different, to where I've decided that if I was even a real estate agent, I would still have 3 other agents with auto searches set up. So those searches will come in. I know my area. I know the area average rents. I know the neighborhoods I want to stay out of. If you invest in or near Tacoma and you see the street McNeeley, you know, just not to invest there. And so I can look at a property in a few seconds and realize if the math works based on what I know the rents to be. I use the CDS rental calculator app made by Chandler David Smith, who was actually on the BiggerPockets podcast this week that was released. Great information from that guy. I'm probably going to listen to that episode a few times. So my auto searches come in. I look at the properties to make sure the math works. If the math works and I know the area and I know it's an area I would invest in, I get a hold of my agent, whoever sent me that specific property. And depending on how good it is, like 2 days ago, I found one that was so good, my poor agent got a text, then an email, then a phone call, because I wanted the offer to be made within 10 or 20 minutes. So I contact the lender, who has me pre-approved to an amount I know that I can borrow up to, and submit the offer. The lender sends in a letter that says, you know, it's pre-approval for the amount that I make the offer. Even if I'm able to borrow more than that, I set that amount at the purchase price of the property. I also have the letter include a statement saying that we've done several deals together and Dion is a good closer, so that the seller knows that my lender has confidence in my ability to close. Send the offer in, and then I pretty much stop thinking about it. I start looking at other properties. If an offer is accepted or if a counter comes back from that agent, then I'll look at this property again. Once an offer is accepted, that's when I do the work to figure out if I want the property or not. A Google Earth view to look at the building, maybe a drive-by, maybe schedule a walkthrough. I have a 10-day inspection period, and in super competitive markets, you might shorten that to 5 days, but I like to keep it 10 days. Right now, shorter inspection periods aren't as attractive to sellers because almost everybody who's selling, their agents are going to tell them, we're going to be weeks out for an appraisal anyways, so a shorter inspection period doesn't speed anything up. During the inspection period, that's where I make the decision to buy the property or not. So I will look at all of the other things. And I have my search criteria that's in my search too. Like I prefer side-by-side units so that tenants aren't above or below another. I want washer and dryer hookups in the unit so that tenants who are waiting for a property to open because they don't want to use a laundromat and they don't want to use shared laundry. I like at least 2 bedrooms with a garage because more space equals more stuff, so less likely to move. So once all my criteria is met, then I will move forward. The chronology continues with having the inspection done. If I can, right now it's pretty easy. I get the inspection done before the appraisal. Last year, appraisals were done faster because it wasn't as competitive and it wasn't as busy as now. And if I can get the inspection done first, if there's enough problems with the inspection, I know I can back out of the deal without also paying for the appraisal because the buyer pays for both of those. Then once the inspection goes through, I will take points from the inspection report and send a message to the seller or the listing agent through my agent talking about any price adjustments or repairs that I want done. My friend who's buying a duplex, it was at 565. She had it listed, the offer accepted for. There was enough issues, not much, probably less than $1,000 or $1,500 worth of repairs to do, but presented in such scary language from the inspection report that we submitted that to the seller and they took $10,000 off the price because they didn't want to fix the problems. They would just adjust the price and then she would, as the buyer, take care of those problems. And it was nothing major. Once that's done, you kind of sit back and you wait for the appraisal. And it's the weirdest time because you sit back and you think, I hope that educated person whose trade is to estimate the value of properties says my property is expensive enough for me to buy it. It's one of the weirdest times where we sit back and we're hoping for something we're going to buy to cost enough for us to buy it because the lender will only lend if it appraises at a high enough value. My goal is usually that the appraisal comes in $5,000, $10,000, or $15,000 under the accepted price because this is the second time when you can try to negotiate the price with the seller. This has worked for me once before. But the seller also let me know that they were in the middle of a 1031 exchange and they had already had an accepted offer that fell through. So I was the second position. I've gotten 3 of my properties being in second position. So I knew that their timeline on their 1031 was pretty close to the end. So I had strong negotiating power. Once the appraisal's done, everything goes to title and Matt, the lumberjack landlord, has done many more than me. So he can clear this up in our next session. But title has time frame for making sure utilities are taken care of, getting the math on prorated rents and how long they need to record things. And so then you kind of go into another waiting period before you get your closing date. And closing date is when you're going to sign about a stack of this many papers, traveling notary if possible, or you have to go to their office. Every time I've worked with title, they've told me that they want me to wire the money, but my over 30 shows and I don't like to wire money because it's too easy to be scammed at just the right time. You'll start getting emails that look very official with the wire instructions. I go and get a cashier's check with if you keep more than enough money in your bank account and have the right kind of account, cashier's checks are free. And then I take it to the title company before closing or before the closing documents. I'm going to look at the chat really quick and see if any questions have popped up. And I really want to say thanks to everybody that's hanging out with me tonight. Not the best presenter without being edited. So what's the goal for your first live? Oh, what is the goal for your first live-in investment duplex? Mike, and I just talked to somebody today who's doing a purchase where they're going to lose money while house hacking, lose money once they move out, and gambling on appreciation in the future. So I don't know that it's the best move, but they're in a market where it might make sense. My goal with my first live-in duplex was to reduce my expenses for housing. With a duplex, it was, for me, it was easier to save the down payment because it didn't take as much as buying a fourplex, even with, a smaller down payment, because you can do that with, as long as you're owner occupying. So I went with a duplex, and it lowered my housing expense from $1,500 a month down to $300. A lot of times when we talk about house hacking, people say that it reduces or eliminates your housing cost. And the house hack that I'm in now, the fourplex, it's paying me $1,700 a month to live here. My first one didn't pay me to live there, but it helped me save money. When I run the numbers on a house hack, I don't run the numbers while I'm living there. I look at it as though it's after I've moved out, the units are rented out. What would the cash flow be like then? Because house hacking is not something I planned on moving into and living there forever. It was to live there long enough to satisfy the owner occupied need of a year. So with both units rented out now, I'm cash flowing about $800, a little over $800 a month now, after principal, interest, taxes, and insurance, after setting aside for CapEx, repairs, and vacancy. There's about $836, random number, that's left over. So $800 times 12 months gives me, what is that, $9,600 in profit a year. I spent about $80,000. No, that was the next duplex. I spent like, if I did a 20, that was what it is. If I did a 20% down payment, because I run the numbers like I did 20% down, even though I did 5% down. Too easy to show a really good cash on cash return if you do a 0 down payment or a 3% down payment or a 5% down payment. So at 20% down for the purchase price of the property, it would have been about $80,000. So as long as I'm profiting more than $8,000 a year, I'm hitting my 10% cash on cash return. So that was my goal with the first house hack. If your first house hack is your first purchase for investment properties, a part of the goal is also learning how all this works. The first time doing anything like scheduling an inspection, you mean I have to pay somebody $500 to go look at a house? And now I look forward to doing that because it gives me that negotiating tool that usually gets about $10,000 taken off the price. The first time, that feels like I'm spending money. The second time, it's like, oh yeah, this is what I do to get that big discount. What do you think of the next 5 to 10 years? Do you think Zillow, Redfin, and Opendoor will take over? I don't think that they will take over. I think the iBuyers strategies are going to change. Like Zillow just learned that AI is not the right way to predict what to do with flips. It wasn't a good model, and that's why they're selling their 7,000 units and changing the entire way they do it. I think that things like Redfin and Zillow are drastically going to change the way real estate agents work. And yes, developing a relationship with your clients is probably the best way for an agent to grow their business. But a lot of people are just going to see the 1% commissions and the automation. When you can do things on an app now that used to take phone calls and emails, or worse, in the back, and face-to-face meetings to talk with an agent. So I think agents have to keep up with that. So I don't think they're going to take over. They're still, and don't have these numbers memorized as well as Michael Zuber does, but last year, hedge funds owned about 3% of rental properties, and it's tripled up to about 9% now. So that is showing growth, and it is more competition. But I think some of the larger companies are going to learn that flipping is a business, and it's not just numbers. And I had a thought, and it left my brain, and like a good answer. That sucks. Marco Polo, always look forward to your content. Thank you. Thank you. Dawn, Tuesday evenings, please. Weekends are not in service. Enjoying time in the boonies. Larry, when you started, how did you find and develop, if any, clauses in your lease agreements on your first 3 properties, and how has your contracts changed since then? I am not a real estate agent. I have a video on literally why I'm not a real estate agent. I like to use, and it's weird, they might work for different places now, but most of the agents that I work with started their careers at Keller Williams. The training just seems to be really good. But the agent has the clause. So I use the terminology of, I want to make sure there's an inspection clause, and I want to make sure there's an appraisal clause in the contract. That the brokerage that agent works for has that information. If I was submitting offers on my own, I would probably go and talk to a real estate attorney and get those offers and make sure my clauses are worded in the language that works in the state you're trying to buy. But my lazy investor answer is that's why I use an agent. And I'm a teaching assistant in the BiggerPockets boot camp. I've done 2 now. And one of the questions that comes up is, how do you negotiate your agent fees down? Which I literally think is the opposite question you should be thinking. I like to look at it like, how do I make sure my agent is making money? Because then that agent is motivated to bring me the next deal, which has happened. And my agents understand that since I invest based on speed is your friend when you're making an offer, that it goes in that order. When I find something I really like, it's a text, then an email, then a phone call, then I don't care where you're at and what vacation you're doing. You have 20 minutes to get this offer submitted. And he laughs. I think I bought one of my properties on his honeymoon. So as not cool as that is, I think it was good because it made their trip profitable. Good evening, people. Jersey trucker. Are you a truck driver? Or is it just the name? Nakadon, hi. Have you went to Phoenix yet? I just flew back from Phoenix. I was there the other day. How do you like the crazy prices? I just outside of Phoenix and invest in Southern Colorado. So Zillow has 250 other houses that they're going to be selling in the Phoenix area. So maybe watch the MLS there for those deals to see if they do. They are selling some at a loss, but it's very confusing math when people say Zillow is selling houses underwater at a loss because they made seller commissions as an agent in the buying process, and they're part of the commission in the selling process. So that price might be lower than what they paid, but if you really look at the math, they might not be losing the money people say they are. Not a math guy, could be totally wrong. Low return in Arizona. I don't know. I think the rents are starting to catch up now. There's kind of an inchworm effect where, like here, prices went up significantly, and I'm going to share some exact numbers. And as long as I don't share my friend's name, I think it's cool. I bought a duplex for $298,000 on the road. 5 or 6 houses around the corner, my friend is buying a duplex for $565,000. We negotiated it down to $555,000. Mine was 2018. $298,000, $555,000, duplexes, same area. Her first year return is better than mine. Interest rates are half what they were in 2018. So even though the price is significantly more, her payment's not really much different. And rents, I bought that place and the rents were $1,125 and $1,130. She's buying this places and the rents are over $2,000. The area average rents for their place now is $2,200. So my duplex now is performing amazingly, and I want to hug it every time I think about it. But hers is going to perform really well first year. So comparing her first year to my first year, she's getting the better deal, paying almost twice what I paid. Because rents have now caught up. Martin, Dion, what type of house insurance do you get when you hack multifamily? Landlord's insurance. So this is something people can make as confusing as they want or as simple as they want. There is no actual such thing as landlord insurance. That's not a thing. You insure the property so that you have property insurance, homeowner's insurance. Whether you live there or it's rental, you have homeowner's insurance. If it's a rental, it's cheaper. That's the part most people get confused about. You're insuring the property. You're not insuring your tenant's items. I require in my leases renter's insurance. So that's what will cover that. Where you live, you have to have homeowner's insurance, and they usually require that you insure your personal items, which I live like a nomad. Like all my stuff would fit in a backpack, and I don't have anything in the house other than this computer that's worth more than a couple $1,000s a total. So it's frustrating for me. So that every time that when I moved out of the duplex into the fourplex, the first thing I did is called the insurance company, and my insurance went from $900 a month to $410 a month for that duplex. So it's called homeowner's insurance on each property, and it usually covers full replacement cost of the building and up to $300,000 slip fall. So if somebody's injured on the property and there's medical, that's what it'll cover. When you have 1 or 2 properties, that's probably enough. As you add more properties, I got an umbrella policy. So I pay $550 a year for $2 million in coverage. So if I'm ever sued on the property, that property's insurance kicks in. If it ever goes above the $3,000 for damages, that's when the umbrella policy of $2 million kicks in. And so people will call it, do you have landlord insurance, homeowners insurance, renters insurance? The renters insurance is one where the tenant just covers their stuff. And have them name you on renters insurance, because I think if the tenant damages something, then those policies will kick in. I've never had that and cover my property. I would not make a homeowner's insurance claim unless it is a serious medical problem or a total burn down. When you have a homeowner's insurance claim, this happened to me in 2006 before I was investing. I owned my house and I had a tree fall from the neighbors, smacked my house, broke some windows, did some damage. It's like not much, $1,300 to $1,800 total damage for everything. My insurance rates tripled, and for 5 years, nobody else would insure me. So that sucked at the time. All of my insurance right now is through Geico using Stillwater Insurance. If I have a claim, and maybe somehow they're all linked, if all of my insurance rates at all my properties tripled and I couldn't get insurance somewhere else, that would cost me a lot more. So I have my deductibles at $10,000. Some of them I think are limited to $5,000, but I have the deductible as high as possible so that I know I'm not going to use insurance unless it's a massive amount of money. I hope that answered the question, Martin. Mr. Banks, how would you suggest obtaining your third property? Preferably a fourplex. So there are some time delay devices in place so that lenders know that you're a safe bet. They don't want you to get 3 or 4 properties in your first year, usually, depending on your debt to income ratio. Once you have rental income on your tax returns for more than 2 years, now lenders can start looking at rental income on the properties you have and the property you're buying and your debt to income ratio. So that can fix that problem. There are faster ways to do this. Michael Zuber and Matt, the lumberjack landlord, recycled capital. They took out home equity lines of credit. They refinanced properties. They took the equity to buy more properties. I have not done that. I'm kind of being peer pressure shamed into doing that now. So I have a meeting with Matt, the mortgage guy, to figure out one of my properties. But I'm slow and steady wins the race. I house hacked to reduce my expenses. I saved for 2 years, purchased the first duplex, rented out my house. It was cash flowing, not paying much, living in the duplex. New duplex was cash flowing, just a little less than 2 years to buy the next one. So my third one came from saving up the down payments. There are faster ways to do it, just not the ones that I chose. My plan was within 10 years, work's going to be optional. I wasn't trying to be a beast like Matt and have 90-ish units and create this huge generational wealth machine, right? That's a cool thing that he did. I wanted enough property to where if I don't get out of bed and want to go to work, all of my bills will be paid. Super simple goal. I knew that it was going to take a few years to do that, though. And I like the fourplexes. They seem to cash flow better than duplexes. And if you can only have 10 loans in your name, if you have 10 duplexes, that's 20 units. If you have 10 fourplexes, it's 40 units. So you can have more units, although unit count isn't the thing I focus on as much as cash flow, or cash on cash return at least. Cody. Hey, Cody. The YouTube live thing is awesome. Well, you should do this on your channel and let me know how it goes. I don't know if everybody knows, Cody was on my channel. I think you're still 21. You might be 22 by now, but I can't even count the number of units you have now. The last time you were adding a 30 unit. So Jersey, I just want to thank you for all the info you give. You and the other two amigos make a great trio. I think the three amigos is a great name for that. And it is kind of fun getting us all together because we each have different perspectives. Someday I'm going to talk to Matt about wearing flannel in public, but I guess it goes along with the landlord, the lumberjack theme. But he's always safe in case a picnic breaks out. Angel, how long do you typically wait between buying properties? For me, it's how long it takes me to save up the down payment and find the deal. So even though this year in May, I purchased a property and it was going to be a while till I saved up the next down payment. I was still looking at deals after that. If the right deal popped up, maybe I would tap equity to find it. Maybe I would pursue seller financing. So between deals in the beginning, it was a couple of years to save up the down payment. Then this income snowball thing kicked in around year 6, and 100% of W-2 income is saved for the next deal. About 60% of rental profit is saved. So of rental profit last year, I saved over $60,000 just from rental profit. So as you have those cash flowing units, it gets faster and easier. And then I might have to get more creative with how I find deals. But so far, I'll write off the MLS. Jersey, yes sir. Here, truck driver. Nice. We need instructors. You need to move to Washington State and start working at one of our campuses. I need like 10 of them. Cashflow King Realist. How does Boise, Idaho look? Booming market. I think Matt and Mike did an episode on one of their channels. I watched it. I forget which channel it was on. Talking about Boise possibly having so much demand so fast that there could be a correction there. I'm looking in Twin Falls, Idaho. This is an hour and a half, 2 hours away from Boise. So kind of like here, I'm close to Seattle. I would never invest in Seattle. I'm south of Seattle, between Tacoma and Olympia and Washington. Commuters, enough economic drivers to have sources of tenants here. Twin Falls is a growing community, so that's where I'm looking at now. My thought, and I haven't ran this by, I think I want to do this Thursday with Matt and Mike, is I want to ask, a lot of people are moving from states where they don't feel like they align with the politics anymore to states where they do align with the politics, whatever their politics are. But people on the West Coast that are moving to those locations, if they move to Florida, I get it. It's coastal to coastal. I mean, hurricanes are something new to learn about, and alligators. Don't have those out here in Washington that I've seen. But if you move to Idaho, the winter in Washington compared to the winter in Idaho is very different. I'm wondering if the first time somebody experiences sub-zero consistent temperatures for several days, if there's not going to be an exodus from some of the states that people are moving to. Chris, hi everyone. Dion, thank you. You have 16 doors. Are you currently only looking for multifamily properties? Yes. Why? I would buy a single family house. There's something Michael Zuber says that I really like. He says he looks at the yield. If you looked at a one single family house or a 4-unit or a 20-unit, of them, the amount, so, and your yield is annual profit divided by cost to acquire. So if you take however much it would cost to buy it and then look at the profit of that one, whichever one had the best percentage would be the one to pursue. In my area, in over 10 years, I have not seen a single family house that cash flows. The only reason I have my single family house, this is going to be super shallow, and I probably shouldn't say it in a live stream because I can't edit this out. I kept that house through a divorce. And that has a lot of sentimental value for me. And I bought it 20 years ago. So it cash flows based on what I paid for it. It does not cash flow based on what I could sell it for and take that money and put it to work somewhere else, which is why I'm thinking about doing that 50% LTV cash out refinance that Matt and Mike suggest. So if I found single family houses in my area that cash flowed, I would buy it. So I'm looking at small multifamily because I don't want to go 5 units or more because I like 30-year fixed rate debt. And I don't have 10 mortgages in my name right now. I only have 6. When I get to 10, I don't know. That's when I'll have to revisit. Do I want to go commercial lending, or do I want to pay off a mortgage and add another? Pay off a mortgage and add another. It's probably the route that I'm going to go. Again, my goal is not to build a big, huge machine like Matt did. My goal is to make work optional. Larry, Lumberjack suggests 4-3-2-1 house hack method, quad. Okay. For loan qualification purposes, but you started with a duplex and then switched. Okay. So Matt can correct me if I'm wrong, because I know that's our favorite thing to do to each other. When Matt's talking 4-3-2-1, he's talking FHA loans, and there might be some restrictions from going from a single family house to a duplex because the lenders don't like that. I have not used FHA. I have not used VA. So maybe VA has the same requirements. Don't know. I purchased my first duplex with a 5% down conventional loan. So I had PMI. It went away when I hit 22% interest. Didn't use my VA. My goal is to keep that in my back pocket in case I ever want to do a zero down payment on a property when I don't have a down payment. And I like to buy some equity by paying a down payment. My next 2 duplexes were 20% down conventional loans. I was saving. It took 2 years. It took a while, right? It got faster and faster. Once that income snowball kicked in, I was able to buy the fourplex. I could have gone with a smaller down payment, but I did 20% down because I wanted that equity position and I had the money. I've got to put it to work somewhere. I did it in that order because I'm using conventional loans and they don't care about the size of the unit or where you're moving or anything like that. It's FHA and probably VA, don't know for sure, that want you to be moving towards a single family house. That's why 4321 method works if you're going to do FHA. Right now, FHA is probably the best way to go with small multifamily because it was the dinosaur days, 10 or 9 years ago now, when I bought the first duplex with a 5% down conventional. You haven't been able to do that since like 2015. Some lenders are looking at doing that. Matt, the mortgage guy, has a product out now that came out this month, where in November of 2021, for the people in the future, high future, where if you make 80% or less of the median income or average income, confirm with Matt, the mortgage guy, you can do, I think it's 5% down on a duplex, but that's not normally a thing right now. Knock it on, and my chat moved. Sorry. It moved a lot. I got lost. Okay. Dang, your $2 million umbrella is $2,800 a year through Safeco. I shopped around. My brother has the same policy I do, basically, and his is I think even a different price than mine, but he's had it longer. When I'm looking for homeowners insurance, I call several brokers. Get Geico, Allstate, all the different ones. And I've gotten quotes for basically the same coverage from my single family house is $300 and something a year. My duplexes are all $410 to $450 a year. My triplex and quadplex are about $800 or $900 a year. But I got quotes of $5,200 for homeowners insurance. That was the same, and the detached buildings were even lower coverage. So definitely shop around when you're looking at insurance. Cody, multifamily strategy, 21. Oh, so you're still 21. 81 units shortly. Awesome. Totally interested in talking to you about that deal that you got going on. I can't pronounce the name very well. Boye Bezu. 5% down, owner occupied, multifamily, a thing. Every lender is different and every quarter of the year is different. So keep looking. It could happen. FHA, 3.5% down is a thing for small multifamily. I prefer conventional if it's possible. In my opinion, FHA is usually meant for worse credit score, worse debt to income ratio, or worse credit score, worse debt to income ratio. So if you can qualify for conventional, I prefer it because the PMI goes away when you hit 22%. With FHA, you have PMI for the length of the loan, unless you refinance or pay it off. But PMI is not a deal breaker. Run the numbers. My friend who's buying her duplex, I think her PMI is $61 a month or something. Barely impacts the cash flow, especially with low interest rates and really high rents. Beverly, what would be the circumstances where you would consider doing a BRRRR? I have considered for the last couple of years doing a BRRRR. The circumstances I would look at is I wouldn't do a BRRRR first. Too many slips between a lip and a cup that you can make when you're learning the BRRRR. Your ARV is different. How they calculate the refinance is different because they don't use current comps. They use comps from 6 months ago. There's a bunch of things about the BRRRR that confuse people. So I wouldn't start with that strategy when you had no cash flow from assets to help you cover mistakes. And knowing how long a rehab's going to take, finding contractors, all of that stuff is things where in the beginning, that's not the strategy I would start with. Like Michael Zuber did, I would start with one rental at a time. And once you learn your systems and you learn how to screen tenants, place tenants, collect rents, have all your systems in place, I've looked at doing a BRRRR in the last couple of years because as I save up the capital for a down payment, it comes so much faster once the income snowball kicks in that I get to the point where I have enough money to go and buy a property and do a BRRRR. So I've got an auto search set up with my agents now for BRRRR properties up to, I think it's $300,000 that need work, don't qualify for traditional lending, so that I can buy them, do the work, and then refinance. But every time I got that amount and I'm looking for those BRRRR properties, like I was ready in May, that single or that duplex popped up and the cash on cash return was where I wanted it. And I've done less than $200 worth of work to it. I bought that and didn't do the BRRRR. But now I'm saving up again. So I'm at the point where I'm looking at doing either. So BRRRR is a good strategy. It's just not one I would start with. David, hey, Dion, thanks for your time. Would it be wise to use hard money to cover a 20% down payment, then refi down the road to continue real estate investing? So you can, but anytime you take out a loan for the down payment, your lender on them, if you're doing a 20% down, you're using hard money, the lender that's going to cover the rest is going to need to know where your down payment came from. It either needs to be seasoned funds that have been in your account or have an explainable source. And when you show the lender, I've got 20% down from this hard money loan, will your debt to income ratio still cover both of those loans? I would consider it. It's risky because hard money usually has that time period. How many months until the rate changes? That's why it's hard money. It's got to be refinanced or paid off. The reason it works for the BRRRR is you're buying the property with the hard money to buy the property and have the money for the repairs. And as soon as all that's done, if you get your timeline right, you refinance and get all of that paid off. If you're using it for a buy and hold where you're using your hard money for the down payment on top of the mortgage, you may not create equity fast enough to be able to refinance down the road, because remember, they only finance up to 75, 80, whatever percent of the total value. Probably could have done it this year because in most places we saw 16% across the board appreciation. In King County by Seattle, there was over 30% appreciation. So yeah, you probably could have done that. But the chances of that happening again, my crystal ball's out of reach. So I think I would look for another way of doing that. Angel, appreciate you. I appreciate you too. You guys are all taking your time to hang out with me. Dro, hey Dion, thanks for always taking our questions. Much appreciated. No, I appreciate the questions. I think I said it in my BiggerPockets episode, helping people in real estate is like my therapy. Like I love the idea of, I've been stuck in a job since I started working when I was 8. My first job was working in the onion fields next to my mom. And I've worked after that, it was a donut store, and then joined the Marines. I've had a job my whole life. The idea that I can make work optional is amazing to me. So I know people in real life outside of YouTube that don't want to talk real estate. They don't want to talk investing. So my brain breaks when I see them trapped in their job and they don't even want to hear about this kind of stuff. So running into or knowing people even through YouTube that want to hear about this stuff is helping me. Lumberjack, Matt, you're a beastish. I'm glad you're taking to Mortgage Guy, soon to be Capital Recycle. Yes. Angel, I should write a book. It will be called The Cheat Code to Wealth, The Lazy Person's Guide to Financial Freedom. And I am going to write that book, but not today. Ace, what do you know about buying mixed-use properties? I'm a barber, and my dream is to own a building with 1 to 3 units up in barbershop downstairs. I've looked at buying a place in a town called Ruston, and it's got a restaurant and then 3 living units. Does not qualify for owner-occupied loans, so you can't use a VA loan because of the mixed use. Probably can't use FHA. Haven't looked into it. So you'd have to have the down payment. I would want to know that if it's going to be your barbershop there, you probably have reasonable confidence in how long that business is going to be there. The restaurant that's in the one I'm looking at, I don't know, hit or miss. So would the other units, the residential side, would they support the mortgage if the business was empty? Because usually with rents on residential, a lot of new investors always have this fear, and this question comes up often, and so I totally understand this. What if I can't find a tenant and my place is vacant? It isn't how long is your place vacant. That's not the question to ask with residential properties. It's how low do I have to take the rent until I have somebody? Because at some point somebody will move in. That's not the way with commercial. There are huge um, companies who get free rent. Um, they're going away. Malls are a thing of the past. But in the 80s and 90s, 80s kid, malls, JCPenney, Sears, and all these, they were called anchor stores, and they got all that space in the mall for free to attract people to the mall so the small businesses would pay rent. So it is possible to drive around your town and see a commercial property sit empty for 6 to 10 years before somebody gets placed in there. So if I was going to do mixed use, I would want to make sure that the residential side could be really close to supporting the mortgage so that the commercial side was not as big a risk. Rachel of Keller Williams. Nice. I like Keller Williams too. My favorite agent that I'm working with now started with Keller Williams. He's with Mosaic now. Okay. Wayne Weizsäcker. Holy crap. Hello, nephew. Unless there is the random chance that someone else on the planet has the same name. Currently in the military, and PCS is coming up next year. I have about 150K saved up, and I'm trying to find a good area. Try to PT at PCS too. I can set down roots. Unless you're literally somebody named Wayne Weizsäcker that's not my nephew, I will help you here in Washington either way. But I would, BiggerPockets Bootcamp has a whole week dedicated to picking a market. So if you're going to be living there, I would look at the weather, would look at the climate, maybe look at the political climate for the state you're going to. I have an investing strategy where I buy small multifamily and I house hack and I rinse and repeat, right? If I was going to look at a new market, I would not look at that market and say, okay, so small multifamily in this market. I would look at that market and see what investing strategy is working best there. I have a friend here in Washington. She sold her house and she's buying houses in Ohio with 1031 exchanges. In Ohio, single family houses where she's investing, cash flow great. Her return is great, even with property management and basically it being a turnkey type of property investment. So Wayne, I would look at what strategy will work in that market, kind of like being a cop. When I was a police officer, you don't make an assumption and then look at the evidence to try to back up your assumption. You try to go mind blank, look at the evidence, and then formulate an opinion. And when the evidence changes, you have to change your opinion. So if you look at a market, like I wanted single family houses here in Washington, but they don't cash flow, so I went small multifamily. I switched to match what the market, what works in that market. Joey, Brother Dion, appreciate the great, and then the chat moved. And figure out a way to work on that. Appreciate the great education of the three amigos. A single family house since March 2020, and I plan on renting it. Should I do that ASAP or should I wait until March 2022? So why would you wait, Joey? Renting it out, if you were going to sell it and you lived in it for 2 years, yes, you can realize capital gains without, the 121 IRS rule would let you realize up to $250,000 without paying taxes on it, $500,000 if you're married. So if you're selling, yeah, staying there for 2 years makes sense. If you're buying a single family house and you moved into March of 2020, if you bought it with an owner occupied loan, check with your lender. Most times it's a 1-year occupancy requirement. There are some if you used a first time buyer program that says you have to live there 2 or 3 years. So check with your lender, but specifically to your loan. If you have the ability to rent something out, the sooner the better. And rents are going up. So I would definitely figure out what the rents are in your area. And historically, I've used Rentometer or called the Housing Authority because Section 8 was pretty close with what they would pay for rents. But in 2021, that's not the case. Those are two systems that get their rents off of what has happened in the last 12 months. And rents are going up so fast, that's not keeping track. So if you're going to rent your place, I would check apartments.com and Craigslist right now today, like you were trying to rent a place of the same size in your area to figure out what the rents are. And because I have about 6 years left before I'm done, do you recommend any areas to look into? I would look at where you have a tactical advantage. when it comes to picking a market, you need to know the neighborhood. So if you live there, you can figure out the neighborhoods. Did you used to live there and know the neighborhoods? An example, like I said earlier, is in Tacoma. 3 blocks away from McKinley, you can buy properties that people will rent. But near McKinley, you might not feel safe to go there and collect the rents. If you don't know the area, then you need to know somebody who does. Do you know a property manager or a contractor, or there's another thing, a real estate agent in the area where you want to invest, to have that advantage to know what would be the best property to pursue? Because believe me, if you call an agent in any market and you say, I'm an out-of-state investor, I'm looking for a great deal, and they present you with one, if you look into it, there are investors in that market. If you're being presented an offer, a deal in that market, just because you said you're an out-of-state investor looking for a deal, there's a reason why the local investors passed on it. So like Michael Zuber says, do the work at least 2 to 3 months studying the market that you're looking at going into to figure out what is an area average, and then go for deals that are better than that. Hey, DL Live Jones, howdy. Joey, I plan on holding the home for the long haul, but living in it 2 years would preserve capital gains exemption if I wanted to sell in the next 4 years. Yeah, so you need to live in it 2 years out of the last 5. And then I talked to a CPA about this. I for a long time, I thought if you lived in there 2 years out of 5, you get to realize the entire capital gains up to the limit. But then recently I heard somebody say, so confirm this before, don't listen to some random guy on YouTube, that if the 2 years were the first 2 years, then it prorates down the amount that you can write off. But I'm not sure. And living there for 2 years would do that. You could rent it out immediately. You live there for a year, rent it out for 2 years, decide you want to sell, move back into it for a year. That's 2 out of the last 5. Ask a CPA if that works. Jersey trucker, I'll be willing to move to Washington State to be a trucking instructor, but not today. Nice. I love driving too. One of the things I miss the most is I'm addicted to audiobooks, podcasts, YouTube. And as an instructor and a person running the school now, I'm never alone in a truck. That's why when my friend said, hey, I've got these guitars in Arizona I want to bring to Florida, I was like, if you rent the van, I'll drive everything. All this time alone driving to Florida, hang out with them a couple days, and then drive back. Those are great times. So I still miss being a driver. Murph, looking to buy second home or possible duplex. Should I refi current home and stay 1 more year for the lower rate, or refi as a possible rental? So it would depend on how high your interest rate is to if refinancing makes sense. If your interest rate is, not very high, maybe a second mortgage on the house to take out cash instead of a refinance, or a home equity line of credit if you're needing to take out money to use as a down payment on the next property. A couple different options there. I have a video on my channel called Home HELOC versus cash out refi that kind of explains which one might make more sense to your situation. Do lenders consider future rents on a duplex in order to qualify for a higher purchase price? They can, and lenders are not all made the same. The first one, if it's your primary and your house hacking, they can look at the rents of the other side, but you actually find in most places, duplexes and single family houses really not that much different in price. Actually, here in Washington, for a long time, duplexes were less than single family houses. Now they're kind of around the same. So if you can qualify for a house in your area, you can probably qualify for a duplex. Once you have some properties and you have multiple mortgages, your debt to income ratio would look bad if they were just looking at your income. So they'll look at 75% of the rents that you're getting from the properties that you already have. Once you have 2 years of rental history on tax returns, they will look at that, and they can also consider the rent on the property that you're purchasing. But I've had lenders tell me that to do that on the majority of the properties that you already have, they want to see at least 3 months remaining on leases. And it was really weird. Why will a lender let me make a 30-year commitment because I have a tenant who's made a 3-month commitment? But a lender explained it to me. And it's 75% of rents that they'll consider in your debt to income ratio. So as you're adding mortgages, you want to make sure that they're cash flowing properties. So basically your debt to income ratio scales with the size of your portfolio and is not really a problem. But the reason the lenders will do this if you have 3 months remaining on a lease, and this may be changing in the future as short-term rentals, Airbnb becomes more and more popular, is the lender that is doing the mortgage isn't going to own the mortgage very long. I've only had one time out of all my mortgages where the person who did the mortgage, the Wells Fargo or Guild Mortgage or Fairway Mortgage, kept the loan more than 3 days. Usually within 3 days, I get a notification that I have a new loan vendor. One time, Fairway Mortgage, just since May, this is the first time, they kept that mortgage and sold it like half a month ago. And I'm struggling to figure out how to pay the new place because it's not set up right yet. So that's why they want at least 3 months remaining on leases. Giovanni, multifamily cash flows in my area, but the purchase prices are high, as you know. Should I still get in now or wait for prices to drop? Okay, so this is to nobody else. This is just to Giovanni, so nobody else pay attention for a second. The longer you wait, the more you're going to pay. Prices aren't dropping. We have hedge funds investing in this asset class. We have high demand, low supply. 40-year mortgages is bringing down the payment, and home buyers buy based on payment. Increasing rents is increasing the yield. Investors buy based on yield. So demand is there. We don't have any of the indicators for a correction or a crash that people are talking about. So the longer you wait, the more you're going to pay. And when you say prices are up, so should I wait? I had the same mentality. My first few properties, I looked for the ones I could afford. And I've said this in a couple of videos, and this is true. This is an actual emotion. I wish all of my properties cost more. As long as the return scaled. The more you invest, as long as the return scales, the more you're making. My best cash flowing property, so I was paying $150,000 basically per unit buying duplexes. I bought a triplex where I paid $175,000 a unit. So it's $525,000 for a triplex, way more than I thought was comfortable. Most of my properties start off at a 10% cash on cash return. That triplex started at a 17. I invested more money. Down payment was bigger. My out of pocket was bigger, but the return is bigger too. I was like, I wish I had 10 triplexes at that number. So look at the area average rents, and as they're going up, project where you think they will be. I know Matt, the lumberjack landlord, has said it on his channel. He likes to use the existing rents, but my binder method is very effective at getting rents to where they should be to get that return. So my suggestion is don't wait. It'll just cost you more. Jones, point me in the video where you break down how much reserves you should have for your first 3 house hack property down payment. Okay. I have one called How Much in Reserves. It's the video. It's literally called How Much in Reserves. Yeah, I'm not tech enough to go grab the link really quick, but I can put it in the chat. It's on my channel. It literally just says how much in reserves. Gives a pretty good breakdown on that. And then the chat moved again. Sorry. Reserves, right? Rachel, peer pressure shamed. Yes. And I'm still on the fence about the cash out refinance. I like having a paid off property, which really is probably the wrong way to look at it because it's an overall equity position. Doesn't matter if there's mortgages on the property or not. Net worth or gross worth of properties is this much. How much of the total amount is leveraged? That's what I should be looking at. And I want to keep it between 60 to 70%. And I think it's getting closer to 50%. So that's a lot of money that's sitting in equity that could be working. So Inspire Life, 1, 2, 3. If my local area is very hard to find a duplex at a reasonable price, do we need to wait and keep looking for or local in other areas for your first unit? There is an asset class that a lot of people miss, especially investors. When you buy a single family house, you're competing with home buyers, and home buyers pay the highest price. There's a 4-tiered price: home buyer, investor, flipper, wholesaler. I think I might have got that wrong. I hate my brain just blanks like that. So, right. So the home buyers will pay the most for single family. So that's your competition in many areas because they can do low money down, owner occupied financing. Investors buy based on yield. And so in some areas, small multifamily, like in mine, perform better than single family, right? Have your agents set up an auto search in your area for single family houses, but have them include the words ADU or DADU. That's an auxiliary dwelling unit or a detached auxiliary dwelling unit. Some places might also call it a mother-in-law house or a granny flat or something like that. But it's basically two houses on one property. You pretty much eliminate the single family home buyers because they're not looking to buy two places and they don't want tenants. That's not their business model at all. They're just looking for a house to live in. And you eliminate most investors because they're looking for small multifamily, which is not duplex, triplex, fourplex. None of those words are in the auto search that shows up with the house with an ADU. Two houses, numbers work like a duplex for rents. But since it's a house with an ADU, that's a single family house. So you can do 3% down if you're a first-time home buyer and haven't owned a house in 3 years. You could do 5% down conventional. You can do 3.5% down FHA. All of that works even though there's two units because it's not really a duplex. So that's what I would look for in your area. The more expensive your area is, the more powerful house hacking is. So some people say, I can't house hack here, prices cost too much. That's where you should be house hacking. If you live in Rosemont, California, town I grew up in, little bitty town, and the house costs 40 grand, house hacking there is not going to do you a lot of good. But if you go 10 miles away to the town Lancaster where the house is 300 grand, house hacking starts to make sense because you're saving money on a significant amount. So that's what I would do. But I'm the house hacking guy, so I would usually go to that. Gregory. Freddie Mac has 5% down payment home possible program, 80% area media. That's the one that Matt the lumberjack Matt too many Matts. Matt the mortgage guy was talking about. Thought on the 1% rule, you are strict on it or flexible? I'm extremely strict on the 1% rule. It doesn't work and it's flawed, so I never use it. Strict rule. The 1% rule made sense in 2010 and 11 when there was a whole bunch of properties on the market and you had to narrow down to something that made sense and you just needed a filtering system. Not one of my properties comes close to the 1% rule, not even close. And all of them get a better than 10% cash on cash return. So they're good investments in my opinion, but I don't hit the 1% rule. The 1% rule is flawed because it doesn't point out, what if there's a $500 a month HOA or no HOA? What if your property taxes every year are $1,000 or $16,000? So looking at properties based on the 1% rule can get you into trouble pretty quick. What I'm finding right now is if you do find places where the 1% rule works, it's usually a war zone. So the prices are so low that the rents would hit the 1% rule, but your turnover is going to be huge. Property manager might not be safe to go to the area. I use a cash on cash return on investment. So what is the yield? But if I'm paying a low down payment, VA is 0, FHA, conventional, whatever below, I run the numbers like I did 20% down because I'm not trying to figure out how much I'm going to make. I'm trying to figure out if I looked at all of these properties with as many things being equal, which one will have the best return if I did a 20% down, because it's really easy to show a high cash on cash return if you spend $0 on a down payment. So I don't use a 1% rule. I use the cash on cash method. Cash on cash method. Real Career Young Money. That's a great name. What is your expected rate of return for your area on small multifamily? My area is that Chattanooga, Tennessee, for sure is seeing compression. You can easily find 1% to 1.5% rule. Now, yeah, so none of mine hit that 1% rule or 1.5% rule. It's the 10% cash on cash return that I look for. In my area, most of them get 4 to 6%. So I look for 10%. If I was buying more often, I might lower it to 8%. But since I'm only buying one every 6 months or a year, I look through a bunch until I find the one that makes sense. So, and this is right out of one rental at a time. Learn your area average. What is the normal return that you can expect on an average deal? Some will be worse. Some will be better. The ones that are better, those are the ones I look for. Thank you, David. Okay. Struggle to get close to that. Usually, yeah. So mine are probably between 0.5 and 0.7 on the 1% rule. But still, the yield is better. Dan, missed most of the chat. Sorry if this was a repeat. Potentially putting in a few lowball offers on Zillow owned homes. That's a good call. Especially right now, if Zillow is being run by AI. I don't know if their system is set up, but the media is saying Zillow is selling all these homes at a loss, but factor in the money that they were paid as an agent when they bought it and the money that they're being paid as an agent when they sold it. I don't know that they're actually taking a loss on that. Corey, can you talk about your experience, if any, with 1031 exchanges? I have not done a 1031 exchange because I haven't sold. So that is a great question for Matt or Mike. I have a friend here in Washington. I just talked about her a little bit earlier. She sold a house in Washington to 1031 the money to Ohio. And she was doing what is called a reverse 1031 exchange, where you already own the properties you're purchasing, and then you sell the house that you have. And I'm going to try to get her on the channel. She ran into some problems where the timeline for the 1031 is set up one way, and the 1031 reversed is set up another. And it's something like you have 6 months to handle the deal in a reverse 1031 until you sell. When you sell, that starts the 45 days that the regular 1031 has. So something changed, and I want to get her on here so she can explain that so that somebody else doesn't fall into that same trap. But Matt, the Lumberjack Landlord, has a live on Sunday mornings, and Mike is at 9 on Saturdays. Those are definitely the guys to ask 1031 questions to. Thanks. I'll look it up. Jones, I'll watch it after or in the morning. Going to sleep. Good night. Port City Trading Desk, 25 with 2 properties and 50K in the bank. What now? I hate your 9 to 5, want to drive truck, not work in a damn office. Reach out to me with, and this is anybody watching, I will answer questions. If you're getting into truck driving, email me. This is my personal opinion. After 17 years working in the transportation industry and 10 or 11 years now running a truck driving school. So Swift or Sierra England, if you're listening, you suck. Nobody should drive a truck over the road. You should go for a local job because they start out so much more money. Average local driver starts out over $80,000 a year. Average over the road driver starts off around 40 and doesn't get compensated for overtime because you're paid by the mile. All kinds of problems with it. So there are some quality over the road trucking companies, but if you want to get into that wherever you're living, give me a call. I'll tell you schools I know that are good and schools I know to avoid. And then I'll tell you companies to look for and companies to avoid. I have been at war for 10 years with over-the-road trucking companies because people think you have to get a CDL and drive over the road for 2 years to get experience, and that's not true. Our graduates graduate and go right into local work. Our actual company tagline is "Be home every night." So if you want help getting a truck driving job, I will absolutely help with that. I did find Jersey. I did find out what the binder method is. I told you I would do my research. Awesome. Thank you. Yeah, the binder method, the thing that I like is, so it helps the investor. It helps your return be better. But at the end of a meeting where the tenant asks for the rent to go up, the tenant is happy. Like when does that happen? When are tenants happy? Happy tenants don't leave and create turnover. Happy tenants don't trash a property. So to me, it's really important. I think I found the mute button. Okay. Carrie, currently have a condo with 80K equity, looking to 1031 into something else. Boulder, Colorado market. Colorado is a hot market. That is where Mindy Jensen and Scott Trench live. They are the hosts of the BiggerPockets Money podcast. I don't know if they're in Boulder, but I know they're in Colorado. I'm actually guest co-hosting the BiggerPockets Money a couple times with Mindy Jensen. So the first one comes out on November 15th. And I'm going to be doing a book giveaway for anybody who watches it on their channel and then comments something like, "Thanks for having Dion on the show." I will be giving away audiobooks to people who do that. Sorry, squirrel, side note. Josh, I keep seeing videos of agents saying to work with a local lender to make the process smoother. Is this something that you can attest to? So I work with Fairway Mortgage, which from what I know is all over the country. But the guy that I work with is here. Like, he's close. I work with Wells Fargo, and the lady that I work with is here. She's close. I shop lenders every time I get a mortgage, every time I get a refinance. Like, I'm going to be talking to Matt, the mortgage guy, this week. I've also got my lender looking into the same information because I'm going to compare their rates and fees in writing, and then I'm going to share their emails with each other, and I let them know this is your competition is going to get to see what you say to me, and I want the best rate. So the person willing to beat the competition is going to be the one to get my business, because I can't look at a lending sheet and know if their filing fee is right, if their appraisal is even close to, I don't know how one of those prices should be. But when lenders are in that business that are setting these deals up every day, look at a competitor's one, they can point out a problem really quick and point out when theirs are better. I've seen interest rates exactly the same. So lenders seem the same. But the buy down the mortgage rate on this one was $5,000, and the buy down the mortgage rate on this one to get the same buy down rate was $2,000. So the fee was what was different. Shop lenders every time. Jade. Aside yield and number analysis, how do you view old properties? 1960 duplex. Do you increase capex, deferred maintenance, reserves? So when you do the inspection on an older property, that tells me how much more reserves I would want. If I have a 1929 triplex, when one of them was built, it's a house with a duplex, and I don't know which one was built first. Don't know which one is the house, which one is the ADU. Someday I'll probably care, but not today. If that has knob and tube wiring, if the plumbing hasn't been updated, if all of the ifs of things that when was it updated, that tells me that when was the roof done. If a foundation has existed since 1929 with no issues, I don't think it's all of a sudden going to develop problems now. So my properties, the majority of them are from 1980 to 1992. So that's kind of my window of properties. And then I've got the one from 1929. I kept a reserve amount in that video, how much in reserves, a nice round number. And then as my portfolio grew, that scaled. So I look at old properties, and very important to have a lead test done if it's before, and somebody correct me if I'm wrong, I think it's 1979. Anything before 1979, you have to have lead test done. Lead paint doesn't mean it's a deal breaker. It just means it has to be covered the right way. And I would look at when electric and plumbing were updated, HVAC system, if it has it, those kind of things. So I would buy an older property. Aside from CapEx, you got that. Okay. Andrew came for the real estate information. Loved hearing all the great advice and positive talk on local truck driving. Nice. Says a truck driving instructor randomly on my channel. You should scroll up through the chat, Andrew. There is a Wayne Weisstrecker here. Is that your cousin? Unless there's actually two people in the world with that name. Knockadon. I just showed my tenants what Rentometer says for the median rent, and 70% which decided to split the difference. They decided to stay and signed a 1.5-year lease. My new lease went up 3. So you had a conversation with your tenant, and in that conversation, the tenant said, we're going to have the rent go up $350. And then they signed a 1.5-year lease because they're happy that they raised the rent $350. That's a great strategy. You should use that every time. Hendrik, have a couple investment condos overseas, home country, looking to buy first primary in Atlanta, Georgia, area that includes a rentable basement, ADU. How would you go about finding the best realtor? So how to screen for a realtor. I don't think I've done a video on that. And when I do, it's probably going to be the 20 questions to ask a realtor. It's too long. I'll figure out a better name. So finding the best realtor, I personally like to work with real estate agents who are investors. A lot of people become a real estate agent and it's their primary source of income. It's something like 90+% of real estate agents never own an investment property. Crazy statistic for people who work in an industry with people who made work optional. But an investor is going to understand the speed of your offer matters. that you're not looking for curb appeal, and you're not looking for which way the kitchen faces, and you're not looking at all the things that matter to a home buyer, that you're looking for yield, and then you're going to look at rentability. So look for somebody who's investing. I kind of like the idea of looking for somebody who invests in the same asset classes that you do. Like my agent that I work with the most here also buys small multifamily. And some people have said, well, doesn't that make him your competition? Right. Well, the guy's not a billionaire. He's not buying every deal that comes up. He's also buying 1 or 2 a year. And the odds of them wanting and being ready right when I am and wanting the same ones that I do, their odds are very small, but they understand what I'm looking for. And you said, how would you find the best realtor? I would find the best realtors. 3, have auto searches set up. Let them know, be transparent. Tell them you're working with more than one agent so that they have the option to work with you or not. I've never had an agent say no. A lot of agents will want an exclusivity clause with somebody who's a home buyer because you're going to take up a lot of their time. You're going to go see properties, all that kind of stuff. But as an investor, they set up the auto search. They don't hear from me again until I want to make an offer. So the chance of a recurring return on their time investment is good with my agents. Whereas with a home buyer, they're going to buy one house every 7 years or so is the average. That probably didn't answer your question well enough on how to find an agent. I like Keller Williams. Their training is great. So I've had good luck with their agents. I'm sure there's other great brokerages out there. That's just the one I've had good luck with. My first agent that I worked with actually owned a Windermere office and had something like 19 people working for him in his agency, brokerage, whatever it's called. So I don't really have a preference there. I wouldn't mind working with a newer investor as long as they had a good mentor in their brokerage. And I kind of don't want to work with somebody who's been doing it for 30 years and says things like, well, this is not how we've always done it, because things change every couple of months. Yeah. So hopefully that helps narrow it down on the agent, and ask them interviewing questions. How long does it take you to respond to me? You test them, send a couple of texts. What are your no talk to me times? Some people won't work on a Sunday. Some people won't work on whatever evenings. My lenders and my agents, like I said, on his honeymoon, I bought a property. So those are the questions I would ask. Knock it on. Thanks. You stole my idea. You stole it because I'm giving it away to as many people as possible. And Larry, have you tried seller financing on any of your deals? I didn't on the first 7. I am making a seller financing offer on every offer going forward. And a kind of a pitch. Send an email to my agent to go to the selling agent saying, here's my offer. If I have to use traditional lending, it's this price offer, this much down payment, owner occupied or not. If you're interested, in avoiding a capital gains hit by getting all of your money at once, I'm interested in saving you that tax hit and doing seller financing with this much down. And then I say the same interest rate as I would pay to the bank. I don't do a higher one like some people have talked about. I say this is the same interest rate. I would prefer to pay interest to you instead of a lending institution. You get to get recurring cash payments every month, but you don't have to manage the property or the tenant, and any problems that have come up are mine. You own a note that you can sell. And just so that I'm not going to do this and then immediately sell and create a tax event for you, I'm willing to sign a 5-year early prepayment penalty of $20,000 in case I refinance within those 5 years. I have to give you an extra $20,000. So the couple other things I put in that email to the seller. So I'm submitting both offers. I could do, and the one that I just submitted, the seller financing they were for the same amount, lower down payment. I could have offered more for the seller financing option. And I can point out that it can happen faster because we don't need to wait for an appraisal. If we go with a conventional loan right now, we're going to need to wait for appraisal. They're all on backlog. So seller financing doesn't need an appraisal. I know the area average rents. I can do the inspection, make my decision then. So I'm doing seller financing on every deal going forward, at least offering it. Thank you. Hendricks, all right. BiggerPockets helped with my agent search, check the forum, and look for active agents on the platform. That's a good call. BiggerPockets forums has a ton of useful information in there. When I first started interacting with BiggerPockets, I went to the forums, and I'm a fairly confident person when it comes to interacting with people, but the mountains of knowledge that those people have is impressive. So I've gone in there to get help. I found the best place for me to share my knowledge was on the Facebook groups. because for some reason, most of the people that were in the forums weren't in the Facebook groups. But that's a great place to find an agent. Beverly, what is the biggest influence on your mindset as an investor? What keeps you motivated? It sounds like a joke when I say it. I'm lazy. And as a lazy person, the idea of having to work it's terrifying. Making work optional and then building a portfolio that is basically apocalypse proof. And I've got several strategies. I've got videos on how I diversified my portfolio. I diversify my tenant base so that my cash flow is protected so that I'll never have to work again. That's what keeps me motivated. And the thing that's really weird, and as a former Marine, I hate to talk about emotions, so this is not a real thing. This is not happening. I got to experience reaching financial freedom, starting as a single parent with 3 kids with $89,000 in bad debt in my name that I didn't know existed until the divorce. Within 8 years to going bad debt free and financially free, that's a great emotional thing to go through, right? But I can only do it once. So I make a YouTube channel. I help people with Facebook groups, instant messenger, was it Facebook Messenger? I'll try to answer questions. I'll put my email out there. I'll try to help people because every time I can help somebody else reach financial freedom, I get to experience it again. And that's really cool. That helps me stay motivated. So the first step, if you're looking for what would keep you motivated, is what would happen if you made work optional? And it doesn't have to be, because as lazy as I am, I could have stopped working in 2018. I still work 50, 60 hours a week. I love my job, but I don't have to work. That brings a monumental amount of mental peace, knowing that if I want to go to work tomorrow, I will. And if I don't have to. So if you could do that for you, because it could be, maybe you work, maybe you find something else you want to do. There's somebody here that maybe you'd like to be a scuba instructor. And the first couple of years of being a scuba instructor doesn't pay a lot. But if money doesn't matter, then you could literally get paid, goof off scubaing all day. Good idea. Well, thank you. Andy, hi Dion. I purchased my first 2 properties, duplexes this year, and I've never done taxes on rental properties before. Do you have a good resource I can look at for a first-time investor? I would go to the BiggerPockets forums and try to find a real estate related CPA. It's so weird. So I have real estate agents, I have lenders, I have handyman, and my biggest gift I can give to any of them is referrals. If somebody's looking for an agent in or around Tacoma, Washington, I've got a couple of great people to send you to. Handyman, lender, agent, doesn't matter. My CPA said, no, thanks. We don't need any more work. He's great. So I don't do referrals for CPA. So I would find one on the BiggerPockets forums. As soon as you have one rental property, I recommend using a CPA. It is worth a couple of $100 more than it costs to file your taxes every year, because as an investor, as soon as I found out there are several types of depreciation, amortized, schedule, bonus, I don't know what any of that stuff means. I could study them for 3 days and make a 10-minute video, and I probably will someday, but not today. But I would have a CPA doing my taxes every year. And I would make sure that they're real estate friendly. And my CPA is in Alaska, and he does my stuff in Washington. So I think tax laws aren't different enough in each state. If I was going to have an attorney, I would want the attorney in the state that I was having the issue, because laws are very region specific. But CPA doesn't have to be one from your state. Do you buy your properties in the LLC, or do you buy them in your name? How do you take advantage of taxes from that perspective? I am waiting until I have 10,000 subscribers, just past 7,000. So thank you all very much. That is awesome to get to 7,000. I appreciate that massively. I appreciate every time somebody watches one of my videos. I'm waiting until I hit 10,000 to make the LLC video, because I think I'm going to piss off half the people, because so many people are convinced you need an LLC. So here's the Cliff Notes version to the rant that I'm going to do when I make the LLC version. And we're so far into this live stream that not a lot of people are going to make it here. So I'm sharing this with you guys. There are times it makes sense to have an LLC. If you have partners, the purpose of an LLC is to protect you from somebody else's mistakes. If you need to use commercial loans or hard money, Most lenders are going to require an LLC. So there are times it makes sense. There is absolutely no tax benefits to having an LLC. The IRS calls them a disregarded entity. So everything that a person that owns an LLC that writes off can write off, I can write off. The only benefit they have is it costs money to get the LLC, so they can write off that expense. The people who are usually pushing for people to have an LLC are people who are new investors who have heard it from somebody else. Attorneys and CPAs who set them up get paid to maintain them and file taxes on them. So they want people to have them because it helps their business. There is almost no asset protection with an LLC. That's a myth. If you get sued and you're in court, they're going to say, list out all of your assets. And if you leave off any asset that's in your name and not someone else's, because that's where partners come in. If you don't have partners, that all of those LLCs are your assets. Google piercing the veil. This is becoming more and more common. Any attorney who's not asleep will just tell the judge, I did a couple-minute Google search and I see these are the LLCs that that person owns. I want you to pierce the veil because if they don't have partners, all of those assets are that person's assets. So there's no asset separation with LLCs. That's a myth, unless you have partners. For asset protection, I do 3 things, maybe 4, but I remember 3 right now. The first one is insurance, homeowners insurance on each property, and an umbrella policy that names each property. Leverage. The bank is in first position on most of my properties. I have 1 paid off for now, but they're in first position. And the third thing is actually fix things. Do inspections, listen to tenants, and repair things that can be a safety issue. Those are the ways that I protect my assets. And you can see from the tone of my voice, I think that's going to be a great video when I do it, because it's going to be me just ranting on the people that constantly swear you need an LLC when there's no real benefit, unless hard money commercial loans are partners. Like I said, there are times like Matt and Mike, I have no idea how many LLCs they have, but with the loans that they have, it probably makes sense that they have a few. My concern is always that a new investor who doesn't have any properties yet never starts, because they're going to confuse the situation by thinking they need an LLC. How do you get financing if an LLC was just created and doesn't have a track record or history or tax returns? I mean, yes, asset-based lending becomes a thing, but they have to learn all of that. How do you pay yourself? The money that the rent's going to is actually the LLC's, it's not yours. And if you pay yourself, does that create another taxable event? Like all of these things you need to learn. Your insurance costs more, your interest rates are more, your down payment is usually more, like all these extra fees that come up from having an LLC that you don't need. Off my soapbox. Night, Josh. Thanks for hanging out. Justin, we're thinking of renting our current home and occupying another in a year. The margins are slim, but it is a growing area with schools. Would you pay 10 to 15K more for a newer construction? The problem with newer constructions, when you say margins are slim, is are there margins? And are the margins positive or negative? Most of my properties are between 1979 and 1992, 80 to 92. I've got one older one than that, but 92 is my newest one. It would be really hard, at least in my area, to find. I've never seen a single family house that's cash flowed in my area, old or new, so it doesn't matter. But small multifamily, if they were newer, the margins are just not there. So if you could find one that marged, I would pay more. But remember, the price of the property, the interest rate, the closing costs, none of that matters unless compared to the rents, because your yield is annual profit divided by cost to acquire. So if the cost to acquire goes higher, but your annual profit is higher, more expensive place is better. So look at the yield of the property, and newer would be great. Maybe you need less money for CapEx and repairs and maintenance. I would probably still do the same amount that I do now, but if you were conservative and doing 30 or 40% before, you could lower it down a bit. And then everybody always says they want places near good schools. Not everybody. Many people say they want places near good schools. I have 16 units. 2 units have kids. And I've had in 10 years, I've had 2 turnovers. One, a person inherited a house, and the other one, the person went to the hospital and passed away. So those are my 2 turnovers. So no kids, and they might be by good schools, but out of all 16, I have 2 units with kids. So that is a consideration that some people have, but it's not one of my criteria. Jeremy, without the SALT tax, it does not make a huge difference to find a local CPA. Larry, what could possibly make you want to quit your job and nonprofit, assuming nothing systematically changes with your employer and nonprofit? There's a shift in my work in the last year. Um, Before this last year, um, I would go to work at 6 and work until 6, and work most Saturdays, and I worked every holiday so that everybody else could be out of the office. I would go in on Christmas so I can answer the phone because people call a truck driving school on Christmas. I don't get it, but so everybody can have the day off. This year, I'm trying to start to learn a life without an alarm clock. So I don't have a schedule to be to work. My job is to make sure that the big things that impact hundreds of thousands of dollars happen for my business. It's not my job to do the day to day. I'm finally getting to the point where I can scale back and go, I have some awesome leadership in place and I have great employees that are working this company. As long as I get the legislature, the employers, the agencies to work with us the way they're supposed to, that's my job. So I'm kind of shifting to that now. So I'm probably going to turn my 1 month a year trip or vacation into a 3 month a year trip or vacation. I don't know that I'd ever quit unless, and Michael Zuber nailed this in a I forget what the video was. How much is enough? I think it was on this channel. He said he said if your company sells, you'll probably quit your job, and he's right. If my company sells, there will be an obligation for me to work a certain amount of time in that selling contract, and I'll be happy to do that. And if the new employers want to keep me on, I'm probably going to stay. But a lot of times when there's a company turnover, the new owners have their people they want to put in management. And management, I'd probably be the first one gone. This is the last job I will ever have. I will never work again outside of this. So, and I do it really, and they're not even watching this, they don't watch my channel, but the owners of my company, Victor and Pedro, are amazing and great to work for. So as long as they own it, I'm probably going to work here forever. If that magic went away, that's probably what would change. But you said without systematic changes. I don't know. Maybe I have major health concern. Don't have any of those. Yeah, so that's a good question. Jeremy, no LLC here. Main reason is so I can refinance HELOC much easier. Yeah, it's much easier, and you can house hack. Can't do owner financing loans in an LLC. And some people will say, well, you get the loan in your name and then you just put it into an LLC. And somebody argued with me on Facebook about this the other day. That can trigger the due on sale clause, especially if there's an owner occupied component. There's an exclusion where you can take Fannie Mae and Freddie backed mortgages that are in your name and put them in an LLC, and they're not allowed to stop you, but it can accelerate the debt. So not a strategy I would risk. All right. Renter's insurance is probably fourth reason on that list. No LLC question. Yeah. So insurance costs more. You can't represent yourself in court. So even if you want to go to a small claims court and do something, and an attorney has to represent the LLC, like it creates all of these issues. Which once you're an investor and you have several properties and you're looking at commercial loans and portfolio loans and all of those other things, it makes sense to have an LLC because the lenders require them. But you have cash flow and you have all of your other systems down, and now you learn how to do an LLC instead of, let me look at this whole world of real estate and figure out which rabbit to chase. Because if you chase 5 rabbits, you're going to starve. So you got to figure out the one that excites you. Learn all the strategies that go into investing in that, and then add LLC to that on top of it in the beginning. I use LLC for loans. Yep. I use umbrella policy for asset protection. Brilliant. So that's actually something I do in my Facebook response is, if you're going to have an LLC, still add the umbrella policy. That's your asset protection. Now, if you have $50K to invest, would you buy one property, put all $50K down as 20% down payment, or would you use other finance, sort of VA, FHA, et cetera, to buy more rental properties instead? For my first property, my first investment property, I did 5% down conventional because it was taking me a long time to save up the money. Since then, I've always done 20 or 25% down because I want my cash flow, the income snowball kicked in, and I have the money to put to work in the properties. But if I was starting out and didn't have any rental properties and I had 50,000, I would probably do a house hack, keeping as much in reserves as I can, use the house hack to increase my savings rate, and use that savings rate to build the down payment for the next investment. If it's more than a year, I might do a second house hack and then turn the first one into rental on both units or all 3 units or whatever you purchased. But house hacking is always my answer because people should focus on making more money, right? There's no limit to how much more money you can make. There is a limit to how much money you can save. You can only save down to spending nothing. So whatever you make, that's the total limit you can save. If you eliminate your housing cost, it is the largest expense for most people. The two most expensive things kind of flip-flop back and forth. You either pay the most in taxes or home ownership. Then you have transportation, healthcare, food, entertainment. So this goes down the list. But if we eliminate the largest one that has the biggest impact on our expenses and our savings rate. So for me, unless you have the ability to save $5,000 to $10,000 a month, then I might just save for an investment property. But if you can save less than $5,000 a month, house hacking will instantly add 1 to 2, maybe even 3,000 a month to your savings rate. You have no LLC for my properties. They are in a trust. So trust makes sense, Matt. Thanks. This not only for loans, the trust makes sense, but the trust really makes sense for your heirs to inherit your property, especially with Matt. So my properties are, I'm going to make a video because I was researching this the other day. So it always feels weird to share stuff like this because 10 years ago, I was making $17 an hour and had a crap ton of debt. My net worth just passed 2 million. For me, this is huge. Never thought I'd have $10,000 in the bank, let alone a net worth of 2 million. The stepped up tax system, I think, goes up to 5 million in assets. And so 5 million or less, then the depreciation and the value of your properties is all reset to what happens when your kids inherit it. But the way Matt invests, he's going to have way more than $5 million worth of property. So a trust will protect that from a huge taxable event when he dies, which Matt's probably not going to be for a few months. Not going to, right? Your LLC or in a trust. Good. There you go, Jeremy. Trust certainly offers some anonymity, which can be useful. Yeah. Some people use that's another time LLC can make sense, is to separate your name from the tenant. So if you're trying to hide the ownership from the tenants, it isn't going to work from an attorney or somebody who's doing research. So anybody who has properties in an LLC, you still get calls on your cell phone because somehow you're the owner of the property when you get those robocallers that want to buy your property all the time. Mark Kohler on YouTube has a lot of information on real estate investing. Cool. I will have to check him out. Yes, he does. Okay. All right. We have been at this for an hour and a half, and I am not the monster that Matt is, who does this for 3 hours every Sunday. So we're going to look and see if there's any more questions. Let's take a few minutes and wrap this up. And again, I want to thank everybody who hung out with me tonight. This is it's a huge compliment. I've taken years to learn these strategies as an instructor. I've got the instructor personality. I've tried to take the information and put it into short 10-minute segments that it's in a retainable with only 3 facts in each video that you can write them down and keep them. So for somebody to hang out and ask questions and care about what I have to say, because there's a lot of things. If you want to ask me about retirement accounts, I am not your guy. I couldn't tell you anything. If you want to know how to make a relationship work, not your guy. But if you want to make work optional and learn how to build a cash flowing portfolio, I'd love sharing this information. How are you from Los Angeles when you can talk about all kinds of loans? If you're asking me, I live in Washington State now. I lived in Los Angeles when I was a kid. So I'm not sure I understand the question. How are you from Los Angeles when you can talk about all kinds of loans? Sorry, I don't get the question. So if you could reword that. Lawrence Law, will you save this video on your page? It's going to stay up on the page. So my goal at some point is to get good enough at doing live streams to where if I ever have a segment in the live stream that has good, short, like a good answer, I'm going to take that out and also make videos so that people don't have to sit through an hour and a half to find something that they like. And I also want to get good enough at tech to where at the end of these, I can play the I'm now leaving music. So I haven't figured that out yet. Jeremy, thank you. You should make more calls from contractors like Matt. It breaks it up. I think so, definitely. Justin, love your videos. Looking forward to your voice. your Tuber's audiobook. I'm so looking forward to narrating that. I'm hoping. I really like Michael's content. I like one rental at a time, off the MLS, traditional lending, make work optional, get to 4 properties, change your life. But his first audiobook with as much good content as in there, that audio version sucks. Like, I've given that audiobook away a couple times on my channel and I hated doing it because it's like a robot voice or something. So I was honest with Mike and I said, hey, I'm going to do a review of your book, but it's going to have a critique. So I'm hoping that people enjoy my voice reading it. Not that I think I have a good voice, but I'm going to try to read it with some tone and inflection and sound like a human reading it. So I'm super excited about that. I'm actually really happy that he said yes when I offered to do it. My computer freaked out for a second here. Make sure I get through all these questions. I want to learn the best loans to buy a duplex. Depends on your situation, your credit score, your debt to income ratio. Are you going to house hack? Is it going to be an investment property? Here's how my order of operations for loans goes. I go to a big bank, and I heard Matt talking about this in his live stream the other day. I go to a big bank, Wells Fargo, Bank of America, one of those, because their criteria is the most standardized. Get approved for the amount that I can in the area that I want to invest. And it usually goes, you can borrow this much for a single family house, this much for a duplex, this much for a triplex, this much for a fourplex, right? So the more units, the higher it scales. Then I look for my properties. Once I find the deal and I get it under contract, I take that loan offer from the large bank to Guild Mortgage, to Fairway Mortgage. And I used to go to credit unions, but I've never had any good luck with them. Now I might check with Matt, the mortgage guy. I'm just starting to work with him this week. And I show them what the bank offered. I see if they can beat it with the best loan product, best interest rate. I go for 30-year fixed. That's why I do 4 units or less. And then if someone beats the bank's offer, to be fair, I take their offer to the first lender and I let them see it so they have a chance to keep my business. The first four mortgages, Wells Fargo won every time. They gave me their best. I went out, looked at the other lenders, took theirs back, and Wells Fargo beat it. It was actually the Wells Fargo agent who taught me how to do this, because she said, I can't call my boss and say, I really like Dion, I want to give him a better rate. But she said, I can take someone else's loan offer to my boss and say, to keep Dion's business, this is the product we have to beat. After that, 2 refinances and my last 2 purchases have gone through Fairway. They were just the better, they were able to beat it. And Jones, thank you. Meet Kevin showed me the door. You opened the door. I'm going to walk through. Yeah, I watch Meet Kevin all the time. So I love Stephan. Everything of his from 3 years ago. And I liked Meet Kevin up until last year. I could watch anything as long as it didn't say stimulus in it. And even with the hair he's got going on this year, I watched pretty much everything he puts out. I was really hoping he became governor. So Andrew, great hour and a half. Thank you. I agree with Justin. I want to narrate my life story. Great voice. Thank you. It's a sales thing to learn how to put cadence into your speech, learning how to put a pause or a hesitation. And sometimes it's on purpose to get somebody's brain to think the next word's coming out because there's been a pause must be important. And then and robot voice that narrated his book just doesn't do that. Larry, the 3 amigos should consider adding April Crosley to join. I have April Crosley. I have a message from her from yesterday. I'm going to have her on my channel. I'm going to do an video just with her to see how we get along. She's got great content too. So that is a great suggestion, Larry. Thanks. Rob, thank you. Knock it on. I'm working with Stephen Dow to refinance and to purchase the home with ADU you found today. Awesome. Cool. New job when the robot truck drivers take over. Book narrator, right. I'm really looking forward to robot truck drivers taking over because they're going to impact the over-the-road trucking companies, which is the ones I've been at war at. Because a driver should be compensated for being away from home, not paid less than what they could if they had a local job. And they should be paid by the hour so that they're actually paid overtime. But yeah, no, I'm actually narrating books would be kind of fun. So let's see how this experience goes. I actually had to order a better mic because this mic is okay, but it's not a good quality. So I ordered a better mic. Should be here tomorrow to narrate the book. So that's a great idea. I want to thank everybody for coming and hanging out with me tonight, and I'm going to see if this works. Thank you for coming to my Dion Talk. April helped motivate you on seller financing when you first started. Love to hear specifics and her specifics and detailed content. Yeah, I totally agree. So you guys have an evening full of marvelous. Hopefully I will see most of you Thursday on the Three Amigos. And if not, I will see you next. I will see you next week on Tuesday. Have a good night.